Hello and welcome to Dialogue. I'm Li Chuan filling in for Yang Rui in Beijing. In 2015, startup companies in China reached a record level in financing value from venture capital investors, and venture capital firm investment funds totaled $37 billion, I should say, and more than double the previous year's total. Why has venture capital investment surged in China? Will China surpass the United States as the biggest destination for venture capital investment? And as the Chinese economy slows, what impact will that have on the venture capital industry? To discuss these issues and more, today I'm pleased to be joined by Mr. Xu Sitao, Chief Economist of Deloitte China, and Chen Hong, CEO of the Haina Group. Before we get started, let's have a look at this.
Venture capitalists poured a record $37 billion in over 1,500 China deals last year, more than double the previous year's tally. Data from Linden consultancy Preqin showed that the amount was only $4.5 billion in 2013.
In the first half of last year, a lot of the funding came from companies that went public, which blew up the valuations of startups. In the second half of the year, when secondary market didn't do well, money from these companies was not there anymore, which caused this bubble to burst. So the current valuations of these startups have dropped back to the level in the first half of last year. Now it's a good time to sit down and talk about valuations with companies. The companies that survived are more competitive, but I think this year the total amount of investment will drop.
I think the slowing down started last October. Before that, the primary market was very hot. It was very easy to get money, even for not so good companies. Then it started to cool off around September, October. Many VC even dropped their term sheet. And this cooling off continued to this year. I think it's a good thing. It's less wasteful. Money now only go to competitive firms. It's not that VC don't have money this year, so they will invest, especially to these innovative internet finance companies, now that the government is giving a lot of support.
Looking ahead, investors say that the transition of China's economy has a positive impact on China's startups, as they are mostly focused on internet and service sectors.
Looking from a macroeconomic perspective, we see the slowdown as a signal for the old economy to be slowing down, right? And that actually means there is more opportunity for entrepreneurs to build businesses in this new economy, which is led by consumer goods and internet and tech. And this is a real opportunity for us to put more money and investment in this field.
China's venture boom created some of the world's most valuable startups, including smartphone manufacturer Xiaomi and ride-hailing service Didi Kuaidi. Chen added that many great companies were funded or started to boom during economic downtimes, and they will be the growth engine of China's future economy.
All right, we're going to talk more about this with my guests. Now, we've seen a surge in VC investment in China in recent years. I'm going to read you guys a number. This is according to a consultancy firm in London. It says, over the past year, in 2015 alone, investment firm invested over $1,500 billion in China, and that fund totaled $37 billion. Why are we seeing such a rise in venture capital industry so quickly in China, Mr. Chen?
I think it is really the economic development of the new industry, that is internet-related companies in China. In the last few years, a lot of internet entrepreneurships being kind of developed and weathered in China. Young companies started a few years ago, very, very quickly in a few years become a multi-billion-dollar company. Many times we call them unicorns. So with that growth, a lot of money, of course, will come in. VCs from the United States, foreign VCs, firms, domestic firms, high net worth individuals, all are starting putting money into those type of high-tech companies. So with that, actually the volume have gone up very, very quickly.
Now, China, it seems that China have all the right elements to have a strong VC industry. The government is trying to open up more about its market, and we have, China's leading in the world in terms of new business development, establishment, and the entrepreneurial spirit is pretty high here in China. But Mr. Xu, how would you evaluate this current state of VC industry? What is the biggest opportunity and the biggest challenges?
Well, as Mr. Chen correctly pointed out, right now Chinese economy has this dichotomy: new economy versus old economy. New economy is booming, and I think this boom would continue. But at the same time, I think we have this. This is not a new problem. Companies facing this severe constraint of financing. So that really presents a huge opportunity for VC. In fact, the market is not a new thing, really trading in the United States. I'm sure at some point will surpass the U.S. in terms of the size of the market.
Yeah, another I think very interesting development we've seen lately is the size of the funding for a private company is growing up very, very fast. Normally a company would raise $3 million US dollars, $5 million, $10 million US to develop the company. Now you're seeing that a company, before they go public, raising $300 million US, $500, $1 billion, $2 billion US, just for one private round. So with those kind of numbers, like our firm, in the first month of this year, we're closing 4 deals, totaling $1.5 billion US. So that's actually other things combined together drive the number, which you just mentioned about, really up.
But, opinions on this are divided. Some experts say that we're seeing a bubble, a tech bubble, that the VC industry is overheated. I'm curious, out of you two, who is supportive of this bubble theory and who is against it?
Well, I think first of all, you can never say whether it's a bubble ex ante. I mean, no one has a crystal ball. I mean, the fact remains, I think, China has a lot of money, and Chinese people save so much, and China boasts the highest saving rate, over 50%. And at the same time, and many companies, they don't have access to funding. I mean, so it seems to me, this industry has a long way to go in terms of development.
Yeah, a bubble is a very interesting thing. And sometimes you see bubbles good, bubbles bad, but sometimes when a country or industry is going to explode, you need some kind of bubble, because bubble make a lot of people get into the game. Because you're going to see high valuations. A lot of people just start a company in 1 year, starting really value the company very, very high. Then make a lot of people become entrepreneurs. A lot of money comes in to fuel the industry up. And at the end of the day, because of there are bubbles today, right? And then some bubble burst, but some other bubbles become a real solid company. That's what we're seeing today. We call it unicorn companies in China. So that's something is kind of, I think you have two sides.
And at an operational level, what are the biggest obstacles? Because we've heard complaints that other foreign companies complain about China's company being not transparent enough about their accounting and report standards, their credit rating, and the legal system is not as good as that in the US, perhaps. What do you think?
Those are not new. I mean, China has been having those problems for very, very long time. In fact, people may say this is another one of the high trust society. But I think there are a lot of cultural issues. I'm sure industry experts like Mr. Chen, they know how to deal with and mitigate those problems.
Do you find that's the most difficult thing?
No, I don't
foreign
think
investors?
that's the difficult. I think for a lot of foreign investors, maybe. But I think it is the nature of the development of economy in China. Clearly, those are the problems, so you cannot deny it. But it's part of the problem when you grow yourself.
But the cultural difference, cultural norm is so different. Some factors that U.S. company value so much, such as profit maximization, efficiency, shareholder rights, are not valued so much here in China. Our society value, 关系, the social network, social capital that can support the company's growth.
Yeah, and it may be different. I think that every country has their own view. For example, in the United States, you have a shareholder structure called AB shares. If you own A shares, each A shares may represent 10 votes. But in China, you don't have that. 1 share per vote.
Right.
Actually, that's more equal to all the shareholders, right? But it's questions I think really what we are seeing over here is that indeed China's developing so fast, and like Mr. Xu said, we still have a kind of trust, credibility growing up over there. So if foreign companies coming here can understand the company and the inside very, very well, they may get into problem of losing their investment.
Right, and the market is operated so different from other countries. The government do play a role. The question is, how much of a role should the government play, and what kind of role is helpful?
I think the government has a very important role to play, but I think the role to be defined by the government is really the referee, not a player.
Right, and with China's economy slowing down and this new normal that we are experiencing, do you think that those venture capitalists are facing more difficulties to find exit opportunities and getting return on their investments?
Not necessarily, and precisely because economy is slowing, there is going to be even bigger emphasis for China to develop a robust capital market. And certain politically charged issues in past, actually I think they could be easier to be dealt with. For example, if you look at the stock market, we've been talking about for years the implementation of registration system, but with valuation at currently low level, I would argue the political hurdle to roll out such reform measures would face fewer political risks.
What do you think on the end of getting their investment return?
I think right now that when the bubble is very high, indeed the return may not be that great. However, with current situation, specifically in Q4 of last year, not going to the first 2 quarters of this year, actually raising capital won't be that easy. And as a result, a company's valuation now, specifically the startups valuation, are starting going down. The expectation of the first, we call it public market, and the private market start getting together. So with that, I think if you can invest into a good company, very important, the VC by the definition is called venture capital. You can invest into the good company. Your return still can be very, very good because in certain segment of Chinese economy, specifically one, the new economy, the one related to consumptions, everything else, that will continue to grow very nicely.
Certain sectors, what kind of sectors are we talking about? Are we talking about TMT, that the technology related, telecommunication and media industries?
I mean, TMT, yes, but I think in China, new economy is broader because for very, very long time, consumption service, they've been surprised. So which means I think the new economy in China is indeed being defined much broaderly than the new economy in Western societies.
You're an industry insider. What kind of sectors are you eyeing in China that are deemed as most profitable?
We're pretty much focused on the internet-related healthcare services, as you can see by our company. And clear, we've done a lot of deals, both on advisory and on the investment side. What we're seeing here is that number one is internet-related industry. We're combining, bridging the traditional industry with new technologies. In many ways in Chinese, we call O2O, in either one way or another, or Internet Plus.
Yes.
Other ways we see is healthcare services. Healthcare is a big issue in China with all the pollution, the air and everything, and a lot of cancers, others. You do need great healthcare systems. So this is one of the areas we see growing very, very fast. A lot of money starting putting into those type of companies over here. Clean tech is another area, I think, because of the air pollution and everything else. I think that's, you can see that I think the VCs and private equity firms alike, they like to invest into those segments where you can see a faster growth than the GDP.
Right, the internet industry is so booming here in China. I mean, we have over 600 million internet users. That's as much as, twice of the entire population of the U.S. Hence, we see this booming industry of e-commerce and internet, mobile internet. What are the next opportunities here?
We see O2O. We see if we invest into Baidu delivery. It's just the food delivery business, but it's internet related.
Yes.
So what they can do is that they can allow you to order something from the internet very, very quickly. You send your food into your home. But it's very interesting in 30 minutes. But interesting thing is that that's starting changing the traditional food industry. You don't need a small store in front of the very high cost street. You can put on the back end called a small center to produce the food. So those type of things we see very fast. Mobility, also mobility to the enterprises, because Chinese labor market also cost is kind of growing up. So you need software like in the United States to really improve the productivity is those kind of enterprise-related software will grow very, very fast in the next few years.
Right.
Healthcare services, again, linking the mobility and putting devices on your body and collect information and having somewhere to process it and serve you on a timely basis. So all those type of things we see are the great area to invest.
All right, and angel investors, let's talk about this. Now, there's a difference in this market in China and in other countries. For example, in the United States, we have pretty sizable angel networks. Some of the good companies like Apple, like Google, or Silicon Valley's company, they're funded by angels. However, some insiders say in China, this market is fragmented. It's not that well developed. It's still in its infancy. Do you agree? Is that a fair statement?
Yes. I think it's more fragmented. That more has to do with Chinese culture, in my opinion.
Yeah, I think you should. I should be more optimistic in this area because what happened was that, understandably, it is correct. In the U.S., you have a lot of angels because U.S. have a lot of successful entrepreneurs. They have experience, they have capital, so they like to use their money to fund the future entrepreneurs. The same thing actually is happening in China. If you look at the BAT, all those type of companies, they all went public. A lot of high-level management team founders, they have a lot of capital. They're starting actually putting money into a lot of startups called the angels. So those angels, some of them starting growing very, very fast. They also have organizations like Yatie, AMA, and others. They also create an angel platform where a lot of entrepreneurs will put money into those type of smaller companies. So indeed, it is behind what's happening in the United States, but it's catching up very, very fast.
All right, let's now take a short break on Dialogue. When we come back, we're going to talk more about the difference in the VC market in China and other countries, and maybe perhaps some tips for foreign investors who are eyeing this market in China. Stay with us. Welcome back to Dialogue. We're going to continue our discussions on angel investors here in China. Now, recently, the Shanghai government here rolled out a new policy which pretty much says that the government could compensate the angel investors who suffer losses making investment in their business. You said earlier in our break that it's pretty controversial.
Yes, it's very controversial. I don't think this is a sound policy. The very nature of this industry is high risk, high return. It's not supposed to be high return and no risk. And if you change the very nature of this industry, I think you are going to introduce a lot of distortions. And also that's going to make, it's going to be, so I hope this is just going to be one isolated incident, and I hope this policy is going to be.
You don't agree with it
I don't
at
agree
all?
at all.
What do you think? Do you agree with what's being said there?
I think I agree with him because in the sense that I think what is called venture capital, venture means taking risk. I think we should leave those type of things to the market to decide from the government per se. If government wants to solve this problem, I think the good idea may be to encourage the tax agencies to do something. For instance, if you invest into an early stage company, when you make investment returns, you get some tax benefit. I think those types of policies probably may be sounder than compensating the losses because you also introduce a lot of fraud. There's a joke on the internet regarding this. So there's a very smart investment banker created two companies, A and B, and invest 10 million RMB into company A. The A then lent the 10 million RMB to the company C, 9 million RMB to the C, and then the company B closed down, declared bankruptcy. Then the government have to compensate for the
So the government
losses.
I would say even you have to be careful with tax policies because I think if you introduce certain tax subsidies, then it would be very difficult to argue, which industry is better, which one is more promising. I just don't think technocrats have the capacity to choose winners. I mean, really, technocrats are not entrepreneurs. This is one of the dangers we see in the economy, not necessarily in your field, because sometimes local government, they scramble, they try to outdo others, and then you have this herd mentality. So I think, as I said earlier, I think local government should retain the roles as the referees.
As a referee.
That's
That
right.
policy says the government wants to provide a safety net. But how prevalent are fraud cases in this industry? I'm curious about this because, you know, we see fraud cases where the sole purpose of that startup firm is to get funded and then trying to find outlets for that money and then somehow channel it back to their own pockets without developing any products and then close the deal, declare bankruptcy.
Well, depends on the incentive. I think once you have a lot of incentives, and people will see the incentive and would have the incentive to commit a fraud. To give you an example, there's a national policy to support electric vehicles, and I'm almost certain certain car makers are colluding with car dealership in order to get subsidies.
And the interplay between venture capitalists and the portfolio company that they fund, what's their relationship here in China?
I think in general, they're very healthy. I always believe that to make a company successful, you need 4 things normally to invest. Number 1, the company has to be addressing a huge market with demand. Number 2, you have to have a great management team. Number 3, this company should have a relatively important position in their industry. Number 4, you have a sustainable, profitable business model. Normally, when you satisfy these 4, it's very likely the company can be successful. But today, no longer true. You need the fifth element called the power of the capital. That's where the VC private equity firms come in. They inject a lot of capital and really allow the company to grow much faster than their competitors. If you look at in today's market, the China's Didi, in the United States you have Uber, you have the group on type of Meituan, Baidu, Weimai, etc. They're all powered by capital. Those without capital won't be able to successful. So those are the relationship.
There's
there.
another problem about what you just said, the similarity between Didi and Uber. Many successful Chinese companies are still being accused of copying, similar business model that are seen in foreign markets. Is that a big problem here?
Well, I don't think that's a big problem. I think I don't think you can achieve genuine success by purely copying a business model in the United States. Somehow, I think they all have embedded certain Chinese flavors.
Yeah, I think what's happening over here, indeed, in the past, a lot of great ideas are happening in the United States, and then Chinese company will copy that and develop that into a further bigger platform. I don't think anything wrong. Because there's the ideas we all can learn, etc. Right? But on the other side is that Chinese internet, specifically the mobile internet, now is developing very fast. Actually, there are great innovations and ideas that's happening in China, not in the United States. So some Chinese VCs are starting to look at the Chinese companies with great ideas. Say, why don't we take this idea, going to U.S. and also the other countries to make them a great company? I think kind of starting getting into an equal level.
I actually have a quote from Uber's chief executive, Travis Kalanick. He says, I'm going to read it to you, in the next 5 years, there will be more innovation, more invention, and more entrepreneurship happening in China, happening in Beijing, than in Silicon Valley. Do you think that he's right or he's over optimistic?
Well, he could be right. I mean, you look at Beijing, for example. I mean, certain things Beijing has other Chinese cities they don't have. A critical mass of top-notch engineering and science universities, and a critical mass of young entrepreneurs. And this tremendous, I would say, direct link between Silicon Valley and Beijing. And it's very difficult for other cities to replicate. And to give you example, I would argue today, Chinese WeChat is a lot more innovative than the original concept being developed in Western countries, because you have the size of the market.
Very interesting that in Silicon Valley, there's something called IC, used to be called integrated circuits. and then later on being dubbed as Indian and Chinese. Idea is that I think in Silicon Valley, a lot of innovations, great ideas are actually developed by Indian and Chinese. But now in China, with the Chinese internet market is so huge, so much money, and Chinese people are very, very entrepreneurial by nature. No matter where they go globally, they want to start up companies, they want to be doing something, changing the world. So as the development of the Chinese internet market from a business model perspective, now starting getting in the innovation stage. Right. Now you have to be innovative to be able to win in the market. Right. So the Trevor's comments over there, I think make a lot of sense. Yeah, pretty fair.
Now, because we're talking about new industry, we're talking about innovation, we also have to think of the intellectual property rights issue here in China. Now, China has formulated comprehensive laws and regulations on this, but still we heard complaints about the lack of enforcement, and this is still the biggest challenge for a lot of foreign companies here in China. Do you think that's a hurdle?
It is and it is not. I do believe IPR issue is also a function of economic development. When you reach certain stage of economic development, I think, for example, in certain industries, and actually, if you don't have IPR protection, that would hurt China more. So that would create incentive for government to introduce tougher laws. And also, once you reach certain economic development stage, certain things people just don't do. So I would say, I mean, it's not a new issue, but it's more sort of function of economic development.
Yeah, I think I agree with you. It is a concern for a lot of foreign companies. Actually, is also a concern for the domestic Chinese companies. They develop IPR and they don't want people to copy it. But I think it's starting to go into a right direction. I think the punishment is still not big if you violate the rule, but I think it's starting to get in there. For instance, now the top 3 Chinese internet video companies, from Tencent, from Youku Tudou, from iQIYI, more than 50% of their revenue goes to the acquisition of the content that is buying IPR. So I think people starting to pay attention to that. If you're kind of violating that rule, certain company may go bankrupt, may be punished very severely. Right. So that's a direction we like to see, yes, to go into.
Now, yeah. Final remarks. Any tips from you two for foreign investors that are eyeing the VC markets here in China?
Well, I think as economists, I would say you have to understand policy responses more correctly. And the Chinese economy is in the transition. Financial sector reform has to be accelerated, but sometimes you also have to take into account, so for example, economic slowdown and other risks into consideration.
Yeah, I think first is that I think the first is that I think for foreign VCs investors, I think do have a confidence in China's development. I think that's something they should have, and making investment, you'll get great return. Another thing is also take advantage of a trend that is developing, that is Chinese companies starting going outside China, beyond China. So I think that's where the foreign VCs and private equity firms can invest together, leveraging their knowledge, experience, and connections outside China with the Chinese company together and benefit from there, adding value. I think that's something just being together with the Chinese industry.
All right, very interesting discussion. I wish we had more time, but thank you so much, Mr. Chen and Mr. Xu. And that is all we have for today's dialogue. Thanks for watching. We'll see you next time. Bye for now.